Hey, let's talk some equities, financial markets, my outlook going forward, and yeah, pretty simple. So obviously, like I said, the short becomes a little bit less vulnerable as we open into this window of the September flows and quarter four flows in general, right? We have the quarterly expiration coming up September 31st. We have the expiration of the options expiration coming up the 18th or the 19th, 19th. Um, and we have yet to really see a meaningful decline, right? We've seen flashes here and there. The earnings reports that we saw on the 31st sparking a 3% decline, the OPEX and expiration decline in August, and the new week opening gap down last week. But that gap down was reversed. Those breakdowns and those legs we've seen develop have not necessarily brought anything meaningful in terms of continuation to the downside. And when I sit here and I look at a lot of charts, I think that there's a couple vulnerable long opportunities that really open up. And there's a couple things that potentially stray me away from my short side focus continuing to develop forward. Um, with that being said, I still will have a higher time frame short side bias. I don't think that it's a good buy in here in long term. It's good to get really leveraged exposure long up here, but you have to play the environment and the hand that you're given within the financial markets. And the market can stay irrational longer than you can stay solvent, and that's something that has proved itself time and time again, right? So it's a little bit difficult for me to continue to have an aggressive short side bias into this window, right? Because of the effects that we have in the end of the year, and then in January with the single stock expiration, I'm kind of more inclined to say that there's a potential distribution of outcomes here, right? And one of them has always been a decline in the Q4 and a reversal into a lower high. And that was kind of my focus, all throughout May and June and July and August. But as we close out August, leading to September, the second potential distribution plays out or could play out, which is going to be that slow melt up higher into um, mid to late quarter one, sparking that decline, very similar to last year, right? If you go ahead and you take a look at last year, we had the massive, panic and sell off in August, right? Not massive, 10%, nothing in comparison to what happened in April, which, if I'm being completely honest, holds a lot of relevance here. Just the magnitude of the 21% decline into April, the massive reversal with the historic volume, the peak fear, the sentiment as well, right? It's nothing compared to that. But August holds a lot of relevance, and the rally that we get is kind of that melt up. We form that higher low in September CPI print. We rally into the election, and then we start to see the signs of a distribution in November. We see our first initial footprint on the Fed meeting in December. We see the fulfill of the election gap into January 13th, the reversal, the continued distributive range and the top being built out in January into February. DeepSeek sparking it off on the 27th, in my opinion. We see the February of expiration come to play, and then post-February OPEX, we get that 12% decline into May, the lower high, and then the massive capitulation and changing of hands. Now, you look at what's developing in this range, we could very, very, very well potentially see something build out like that, where it's kind of a stagnant range, a sticky range. You have to be a stock picker. You have to pick just longs that you like, right? And going forward, I have some. I've had some longs that have been very, very clean, Zomb, Lyft, um, UNH being some of them. But you have to you have to understand the range and the exposure that you want. So, as I said, we see the preliminary signs, but none of these legs have necessarily stuck. We see the gap down last week, the red to green closure. It's not so vulnerable right now. And it's just not a fun market to trade, especially if you're looking for intraday, intra-week moves. It's more of a stock picker's market. And, you're not going to be, you'll maybe make a little bit more money, but the mental capital and the risk to reward in general of trying to time the top is not worth it. All right. If there's anything that I've learned, timing the top or the topping is a process, the bottoming is an event. And that's, true in August. That's true in April. That's true in quarter four of last year. I think that's coming to play now. That's true. Down here, this was a CPI print that sparked this bottom in October. This was COVID, the bottom there. You can go back historically time and time again, right? And the top in 2021 into 2022 took a while. These things take time, and it's not surprising to me. I still do think a decline happens in 2026, but as time goes on, it's very, very hard for me to kind of have a lot of conviction behind it per se in terms of like intra-week moves. I mean, this is a very gross print on Friday. Across the board, financials finally getting hit. I mean, we see the same thing developing on Qs. Financials getting hit with a 2% decline on Friday is the first kind of signal that I'm looking at here, right, with the volume behind this weekly candle. We see a lot of financial names get hit on Friday, and they are building out these distributive ranges. I'm not saying that a decline can't happen into November, December. I'm just saying that the likelihood of that happening is becoming less and less going forward. And the risk to reward is not necessarily in your favor going forward on these shorts when you can just play the trend per se and kind of ride out some commons longs and wait for the window to open up. But what I will say is the financial sector getting hit is a very notable red flag across the board, right? We have a lot of ugly kind of looking prints. We have Schwab, an all-time high failure with a 5.7% session on Friday in a very gross weekly print within a distributive sequence that I think has been developing for a while now. We have a lot of these names giving you really bad looks, and when you see the financial sector starting to get hit, that's a really bad sign because even in December of last year, these kind of foreshadow the breakdowns, right? These kind of give you that sign. This was a really weak rally into a lower high, and then the April reversal sparked a 10% decline from peak to trough of this lower high, 17%. Sorry. The financial sector usually foreshadows a lot of things happening, in my opinion. And I think it's doing so now. I also don't think that there's a necessarily vulnerable edge short side financials quite yet, if I had to say so myself. So it's just a waiting game, right? The semiconductor space, that 283 range is pivotal on SMH. We have some bear gaps to fill. We have a pretty ugly print on Friday. This weekly candle is not super bearish. We haven't cracked through 283 yet. That's been kind of my line in the sand and something that I'm waiting for, right? Energy, this is that kind of risk-off equity, that risk-off sector, and something big did happen in April. I will say that the potential for this to fail the $90 spot and revert to 72 is always there in terms of filling this full gap from 2022 and taking out these lows, and that could definitely lead to the sector being an outperformer overall in 2026. That would be along the outcome of the melt up continuing and the stagnant range continuing into next year. There's also the potential for a higher low to be formed. It just depends. It's not looking the greatest right now in terms of a lot of these names and the breakdowns we've had off the highs we put in last week. But it all depends, right? Zom was a really good commons long. A lot of these energy names have been really good longs, but you have to de-risk your exposure and be pretty patient and be pretty cautious with these, in my opinion, because the potential for these lows to be undercut is always kind of there, especially as we're reverting into these gaps, right? We're not getting the worst looks, but we're not necessarily getting the best looks, in my opinion. It's a sector I'm going to be pretty inclined to see how it behaves going forward, but it would be one of those sectors that I'm kind of not opposed to if we see that potential outcome come into play where we get the float up in the next year, seeing a decline in underperformance in this, and then that rotation into it next year, where we can potentially see that reversal like we did in 2024, quarter one and quarter two, right? There's nothing that I'm super cleanly, aggressively running along in terms of tech, but there's just not anything. Like, this is a really notable daily candle volume on XLK and weekly candle, but the gap down that's reversed kind of, I don't know, it's a little bit speculative, it's a little bit interesting to me going forward. I definitely have that short side bias, but it's very hard for me to have. We have PPI and CPI this week. PPI Wednesday, CPI Thursday. That'll be potentially a catalyst going forward this week if we want to see a reversal, but I don't know how aggressive I can really justify that trade, right? But I also don't know. It could be there, right? It's really speculative. I mean, Tesla is a good commons long that I think could break out to 400, potentially offer you an options trade. I think AMD looks very hideous, but we are pulling into these gaps below. We have some gaps left above to potentially put in a lower high. Nvidia looks very weak, but we just filled that 164 gap from August or July, and I'm interested to see how these things develop. Is all I'm kind of saying. Um, there's the potential for a decline to happen, right? Like a lot of these don't look super good, but it's not like a super vulnerable read short side on these. Just had a 12%, 10% week on Google to new highs. But then you analyze this range, and it's just not the best look on a weekly and daily time frame. The long here was phenomenal. The long throughout this range into June and then July, and we filled the earnings gap from February, and I don't see an edge there long anymore. We have the same kind of thing on Amazon. Like, there's not a clear read on these. What I will say is the lift chart is phenomenal from 13 to 17 to 18. You can take off a good chunk of your exposure. This was a pretty minimal risk when you analyze this earnings gap and a potential change in character on a lift name that's been beaten down. We kind of finally have that harmony in terms of the volume patterns into a pivotal point and a reversal breaking structure here. This was a good commons trade. You can take 30-40%, cut off a good chunk of your position, and potentially rally at another 20 to 30 to 60% overall. I think JD looks phenomenal. I think when you look at the weekly chart here, we have a name that, again, another beaten down name, gives you a really nice pop and a really constructive weekly high or low. Your first initial attempt resulted in a lower high. We break down and we continue to fill this gap and see these kind of climaxes built out on daily structure. Long exposure here on options is not really my cup of tea with these China names, but on commons throughout these lows built out, like starting in July into here, we can get a really clean like 15 to 20% reversal from 30 bucks to 35 to 40. I don't really justify trying to trade this to 50 within this range. I think it could offer a clean reroll on commons. But this could be an outperformer. The Intel chart can be really, really clean on some commons exposure around this 23 to 24 range. If we break through that 26 to 29, could be a pretty clean opportunity in my opinion. Options could open up pretty soon on that. UNH has been clean. This has reverted 40+% off of the breakdown, or 37% off of the breakdown under May lows, signaling the strength of that bid and the massive change of hands underneath such a massive, massive footprint that we had in May on the historic volume. I think this is a great long-term buy that you don't even need to cover any. This was also a great short-term buy you can cover and wait for, either that or, that to re-roll and add some options or add some commons again. I think there's 3 trades that are developing here. An options trade that you could have taken within here, rallying into the gaps, a longer term position that you don't really want to touch till 340 to 380 in my opinion. And then a shorter term commons trade that you can take on this kind of capitulation and change of hands underneath these lows and revert 30+%, cover a good chunk, and then re-roll those commons for what I imagine would be a last point of support into 380, give you another 37%. So that's something I'm taking a keen interest in. The Rivian chart looks pretty good as well, in my opinion, for a move from like 13, 14 to 17 to 18 to 20. Commons is not a bad look here. A little bit of a speculative name. They're seeing a big amount of volume pour in here, but it's relatively appealing in terms of a strong bid and a lack of aggressiveness behind the seller. I don't know how keen I am to trade this. It's not very much a big interest of mine. Palantir with a breakdown on Friday that doesn't look super appealing, but just also doesn't offer a clean short. And I don't know how this develops, but I have a hard time longing these names. I also have a hard time shorting them quite yet. It's just up for interpretation and time will tell. Nike will be along. when we can finally break into this gap on commons for a move to 90 to 100. You're seeing the exhaustion and the lack of progression from buyers and a high sold off on these, attempts to make new highs. I think the draw in terms of just supply and demand is going to be into this gap. Maybe a sweep, maybe a full fill, depending on how the tape of the broader equity market is. But this will be a focus to 85 to 90 to 95 to 100 going forward. A very notable accumulation that began in June of last year following the earnings report. And we've seen a pretty aggressive amount of volume pouring in and a really strong 20% week off that earnings report in June. That could potentially spark that change of character and revert us to the gaps above, right? With 94 to 100 kind of being the end-all be-all target on commons on Nike. In my opinion, no position yet. This was a really nice trade here. Kind of a clean trade underneath these lows, but never really got anywhere in terms of developing a higher low. We see the massive decline from 82 to 50 in April and the historic amount of volume, and then we finally put in kind of that nice pop signaling the strong bid, just simple things like that. PEP was a clean 20-25% reversion on commons, but we put in some notable weekly prints or daily prints that don't really give you a clean look, and it's not necessarily a position I'd like anymore. It's a clean trade here, was a clean trade here, and then we revert, and the signs of exhaustion are very evident. CRM is kind of a focus of mine personally. We undercut the August lows in April, and we broke down underneath those lows in August. This has been an underperformer, and we just put in a pretty nice candle on the earnings report last week in terms of a gap down that was rebid on a nice amount of volume. So this will be a focus of mine. In terms of a potential reversal to like 300s, this could be a good commons trade if a structure set up appropriately. Right, and PAW, this is a big short focus of mine into 2026 to revert down to sub 110 bucks, down to 100, 105. But nothing I really quite like yet, right? We see the ugly kind of print off the report, see the fulfill of this this gap that we declined like 20% in a couple of sessions, but never really have anything notable in terms of character quite yet. And this could just head up for a true UTAD. There's a lot of liquidity and money built up above a candle like this, and so that could always be a play. But this will be a focus probably next year of mine, right? We have kind of the preliminary signs in February, a 24% decline off the earnings report. Never took out those lows, never took out the August lows, rallied to new highs, saw a stall, put in an attempt at a higher low, another stall off the fake breakout off the report, the decline in April, and then this will run up into a peak to trough 20% decline. With a 1% new high made. So just little things like that. But I have my handful of long focuses, right? Being the UNH, the Tesla, the Intel, the JD, the Lyft. This is commons, this is commons, this is commons, this is commons, this is commons. This offered a really nice options trade, but not really right now. And this is commons, but I think another trade options wise we'll set up again on that. And then just being patient, right? Like it's a waiting game. It's a patience game. You will lose more money trying to time the top, and then eventually timing it, and then trading lower highs, and you'll end up making less than you would have if you would have just waited for the top to be put in, waited for the correct structure to be developed, waited for the correct index or window to open, waited for everything to kind of align, and then you slam those shorts. So for me, it's something like that. We have some data this week. Earnings season is over for now. So it's going to be a waiting game, right? It's going to be a patience game. It's going to be something that you have to see how these develop. My focus is long and short. A lot of these shorts aren't giving me the look that I want. And as I said, there's a as Jem Carson says, there's a potential distribution of outcomes, right? And the compression of vol is also very notable, right? I do think that this could give us a vol spike at some point in terms of just the compression here, the selling of vol from dealers, or just from everybody overall. I don't really know too much about that space, but a massive rise in volatility could potentially lead to the vol buybacks, and that could exacerbate the move, and that could aggressively sell us off. But then that would most likely be a vol event, and we would have something similar to August and April. So it just depends. I don't like to speculate too much about that, but we have to see. I mean, gold's rallying. It's not necessarily best sign for risk on names. These inverse ETFs are still getting hit with massive amounts of volume down here. IWM could potentially trade to a true UTAD up here above the highs that we put in December, November, right? And this could start a decline down to sub $160. There's multiple different ways. Like, we never really put in a clean high or low. I mean, I guess we did from here to here, but we never really undercut these lows in April. They give us that true kind of spring. So it's all up for grabs, in my opinion, right? It's all up for grabs. There's a lot of different ways that this could plan out. And I think just being prepared for all of those ways, right, is kind of important here. I think being able to understand where the edge is and where the opportunities lie is a very big thing that a lot of people don't like. Understanding why it's still okay to have a little exposure long, but why ready to flip short at an instance within this range is it's not. That's an underrated skill that a lot of people don't utilize as much as I think they should. But a lot of people are fucking idiots. So yeah, that's just my outlook. This is a really clean Macy's chart. Underneath these 2023 lows on April, we put in a higher low. We rally in the report. But I'll have my long focuses going forward. I mean, if you just want a long side portfolio, there's longs that we have here, and then there's longs that can open up when the broader risk on names start selling off, like that Nike, the Zoms, or the XLP names. So we'll see. For now, it's kind of waiting. It's kind of riding out some commons longs. Like I said, there's a good amount of opportunities. It's been a really informative sequence, in my opinion, because it's just showed that these things can really be very irrational. And the window and the way that this happens is very notable as well, and I think it's just a great learning experience overall. So, quick little update on just my read on the equities and my potential outcomes going forward, right? Something similar, just as simple as that.